Prep mine.
Hey, everybody, welcome to The Sense of Things. It is the week of the 30th, the end of April here. April showers are hitting me here in Austin today, which is good. And hopefully that will lead to the May flowers and getting my stuff done in the garden. But on top of that, today's show, we're going to really focus on what's going on in some of the what I would consider the more technical parts of the market. Ron's going to cover some of that. He's going to cover something that's called the death cross, and he'll be also covering a little bit of a look at oil and what's going on. I will be covering some economic issues. We had a couple big numbers come out this morning in ADP employment and the GDP, and those were not good. So we're starting to see some things build up, and I think it'll be a good show to really follow through on some of our logic with that. So stay tuned. We'll be right back on in just 1 minute. Hey, everybody, it's Jeff and Ron here. Ron, how you doing, my friend?
Good morning. You got April showers. It's still good spring weather here, so I hear you, but lots of economic stuff. Of course, nothing new on the tariff front, but the market's selling off and it's just getting thrown around like a rag doll.
Yeah, it's just so funny. The 3 days of the market steadily going up and hearing from clients. Again, now it was before it was, oh my God, what's going on when it was going down? Now it was, what's going on? Oh, what, are we participating on the upside? And I'm like, just wait.
I think it was a combination of a bear market rally, dead cat bounce, and the end of the short squeeze.
Yeah,
I think that's what it is. And I think now the GDP, and you'll go over that, some of the other numbers, I think they're settling in. Also, with the contraction in GDP, that's Q1.
Yeah.
That means we will, not for certainty, but that means we're probably going to have a contraction two quarters in a row. Because definitely with all the pullback and the noise now, we'll have to see what happens.
And then the funny part's going to be, it'll be 2 quarters in a row down GDP, and the media is just going to be flush with, it's a recession and all this. And I'm like, did this happen during Biden? And y'all said, oh, no, that doesn't mean just because it's down twice.
No, keep flooding the market with more government jobs and money.
Yeah, exactly. So there's less people in the government in Washington, and they're not spending money apparently. But yeah, I mean, it's just so funny. I love watching the media, and it makes me laugh. But you've got some good stuff to make us laugh to start us off, right?
100%. Okay, so here we go. These always make me think, because being a sport guy, I thought I knew this, but in what
I'm saying, professional wrestling, baby.
No,
really?
I didn't even think about that with the mule kick, but I don't think they're allowed to kick in wrestling. Maybe not. They do.
Yeah, they are.
They do
not in wrestling, but like professional wrestling, World Wrestling Entertainment.
I know what you meant. I know what you meant. Yeah. All right. So what do you think? Wrestling?
I said wrestling, but it's not snowboard. Oh, yeah. Okay. I got it.
I've watched snowboarding. It's nice. It's interesting on the half pipe, but
it is.
I don't remember either of these.
I could say probably also curling. You got mule kicks and curling too. Who knows?
I got you. All right. Next one. Where did coffee originally come from? This shocked me.
The what?
Where did coffee originally come from?
Okay, originally come from. It's going to be on the equator, because that's really the only place it grows. I'm going to say Ethiopia.
My man.
Bam!
I thought it was a South American country. I had no idea.
Yeah, but you got to think, this was like back in early on times, and I
understand.
That's really the only. It's actually the only part of Africa that's decent that you can actually grow it.
I've never had Ethiopian coffee. I have no idea.
I've never had Ethiopian coffee. I've had other sub-Saharan African coffees, and they're really damn good.
All right. And what country has the most volcanoes?
Volcanoes. I'm thinking maybe United States.
Indonesia.
Okay. Yep. Okay.
You could have given me 50 guesses.
Never would have come up with that one.
After 51 choices, and I probably still wouldn't have got
it.
All right, here we go. So a lot of people have heard this because This is typically a headline in financial media, whether it's print, digital, or on TV. And basically what it is, you got the 50-day, which is the green line here. You got the 200-day, which is the red line.
Yep.
When the 50-day, the green line goes through, meaning through the bottom of the 200-day, that's called a death cross. Now, a golden cross is basically when the 50-day crosses above, and it's usually showing momentum. But as you can see here, there was a hell of a bottom here before we got our golden cross. And then we had a death cross here, but obviously the crosses are late depending on the momentum. But obviously, because of the precipitous fall that we had just in 6 weeks, the death cross happened a lot quicker. What does this mean? There's still bearish sentiment. Have we bottomed out? Don't know. We were just talking about this, that probably what we're seeing is a bear rally, a dead cat bounce, and the end of a short squeeze. I don't know what your thoughts are, but a lot of times, even when we go up and hit the 50 or the 200-day, it's typically a short-term top, which we hit yesterday. We actually hit the 50-day yesterday, and now we've retracted. What are your thoughts?
I look at it from the perspective, I think I agree. Sometimes the technical stuff works, sometimes it doesn't. And at this point, I do agree. I think it's still a little bit early. Like I said, I had clients reaching out to me going, okay, are we back in the market now? And I'm like, no, we're not. We're maybe stepping our toe a little bit into this, but until I see some skins on the wall with the trade stuff, I think we're just going to continue. The market is just literally on pins and needles, and everything is so headline dependent that we're at a situation where you just don't know what it's going to do on any given day. When we're sitting here taking a look at the stock market, had a 3-day rally and everything was good, and then boom, the employment numbers and this number comes out really bad on GDP, and the market just boom sells back off, and who knows where it's going to go from here. Is it going to test the bottom again, which we've tested the bottom twice at this point?
Well, and the other thing too is when you're looking at technicals, you're looking at the black line, which is the trend line. And you have a confluence of factors here where when it hits the bottom of the trend line along with a moving average, that's pretty strong resistance. But one thing I think it's interesting, here we are 2 days away from a 1-month announcement, from April 2nd to May 2nd. Not one deal has been signed, not even with a tiny country trade partner. If this doesn't tell you that we're in for a bit of a long haul, sideways, rocky action, I don't know what else to tell you.
Like I said, I think they're close on a couple countries like India and stuff like that. But quite frankly, we don't trade a whole lot into India.
I just heard this morning about India. Here, what they've got to do is, even if they come to some type of term of agreement, they still have to go through their government process to get approval.
And I think that's going to be true of all these countries.
Most of them.
They're going to have
definitely
to go through
Britain and France.
Britain and France. Britain's fine because they're their own, and certainly they're going to have to, go through the parliament and everything else. But France, then you start digging in the euro or the EU, and you got to herd those cats to get them all in the order and everything else. And it's interesting. I was looking at a little bit shorter term 6-month chart, looking back to basically the beginning of the election. And we saw a point on the S&P 500. And this is what I've been watching to see if we could get above. There is a resistance point on the S&P, or the SPY, so the S&P Spider, at 550. And I've been looking at that number, and it keeps hitting 550 and then bouncing off. And then yesterday we actually went through that. And I like to see a follow through day, and today, bam, again. So it's like there's this
3-day rule. You got to be there at least above or below trend lines for 3 days. Okay. So the next chart I think is interesting. And this is where, look, I know we're like an echo chamber here with a lot of the bearishness, but this is the percent of S&P companies with positive year-over-year price change. And we're looking at about 42%. This means 58% has negative price action, meaning
Price
that
action.
they're lower than they were a year ago. And if you just look at the chart, when we hit the low on the pullback on April 11th, essentially, we wiped out 1 year's worth of gains in literally
Absolutely.
6 weeks.
Yeah.
This is not a good sign. Obviously, we should get a couple of snapbacks here, but even this is not positive. And
Well, and I mean,
lastly,
if you looked at in that price movement there, if you looked at the drivers of the market prior to that, the Mag 7, they have all been down miserably at this point in comparison, way more than the
and
rest
they're all
of the
down pretty
S&P.
big today.
Yeah.
I think more than a point and a half, 1.5 to 2%. But here we go. So it's funny. I haven't really brought it too much up in many podcasts, but I look at this every week, probably not every day. And oil is a canary in the coal mine. It's basically an indicator of demand, which is why I don't recommend energy stocks, especially ones that are pegged to oil, because nobody can really tell me why oil goes up or down. And here we are on the left, we have the 50-week average. We are below the 50-week average and came up and whacked against the trend line and has gone down. Now here's, and okay, on the right side, we got the 50-month average. Same thing. Look at that. It's amazing. We kept bouncing up off the 50-month moving average line down. We've been trending down, and now we're down below that trend line again. And this is the interesting thing that I watch about oil. Two things. About 10, 12 years ago, I can't remember, they had one of the Saudi oil ministers on CNBC or one of the channels, and he said, we like to see the price of oil between $80 and $100. And I'm nodding my head and I'm thinking, I'm like, how do they know that? How do they know that? And dig into the numbers a little bit deeper. I don't know what the exact numbers are, and I should have been more prepared today. The average cost in the US to pull out a barrel of oil is somewhere in the $54, $55 range.
Yeah.
In Saudi Arabia, because of their cost of labor, it's in the teens. It's like $12 to $15 a barrel.
Yeah.
Of course, they wanted 80 to 100 because they know over 100 US oil, the explorers make more money. Under 80, they got tighter margins. So they know 80 to 100 is probably right. They're not dumb. They know. But they know at any point, because of their cost to pull the barrel out of the ground, they know what they're going to make. But this is a little bit of an ominous sign, at least in the short term, as far as where the trend is. And also another reason why I could bring up Chevron, Conoco, Phillips, ExxonMobil, and look at these charts, and they've gone nowhere. Pay a good dividend, I hear that, but they've gone nowhere. So if you're looking for growth in your portfolio, why are these energy stocks being considered? It was a bit of a rant, but this is something I look at frequently.
Well, but I think it's always funny when, okay, so we're going to loosen up restrictions on drilling and everything else. That just means there's more production, which means the price is going to go down. I look at oil from a different aspect. I look at oil as that oil goes down, that means the cost of fuel goes down, which means all of the cost of goods typically is going to go down as a result.
There's more spending money in people's pockets.
Yeah, there's more spending money, but it's okay. It doesn't cost me as much. If fuel's down, if petroleum's down, that means that my fertilizer as a farmer is going to be less. My diesel fuel as a trucker is going to be less. All those things, that input is such an important part of inflation. And you wonder why we had inflation through the roof, in 2022, 2023 there. Oil's up over $100 a barrel. Diesel was $5 or $6 a gallon, which is insane. Somebody's going to have to absorb that. And unfortunately, it was all of us that had to absorb that. Yeah, I think it's an interesting thing. I think we're going to have to actually see that come down a little bit more. So yes, investing in oil companies not exactly the best plan at this point.
It is not. What do you got?
Let me quickly do some of my favorites, which are talking a little bit about the economics. And this was not necessarily a good economics morning for those of us that are in the market. We got the ADP report, which you and I have discussed before. I don't necessarily put a whole lot of credence into this because they are all over the fence and they are inaccurate as hell a lot of times. But this was a big shocker for the market because the previous was 155. That was revised down to 147. The consensus for this month was 125,000 with a range between 80 and 150, which I think is hilarious. You could drive a truck through that. And it came in at 62,000. That's private employment largely. And that's saying that companies are still on the fence on should we be hiring? Should we not be hiring at this point? And I think it's something we need to watch very carefully if that trend continues, because Uncle Sugar is not there to hire employees anymore in the government side. So I think the ADP and the Friday employment reports, I think, are going to be a little bit closer now because they've been skewed so much by government employment over the last couple of years. Other biggie today was GDP. Consensus was prior, it was 2.4. Consensus was 0.2. With a consensus range of -5 to 1.1%, it came in at 0.3%. So the first quarter of negative GDP growth since 2022, that starts to look at, okay, now we come out of the Q1, which is the president just got in, started doing some stuff. The market has been slowing for several months, or already have been slowing towards the end of last year. Now, with all the tariff talk and all that, it's very likely that we'll see another negative GDP growth quarter.
Yes.
Like I said, of course, the media will immediately jump on that and say it's all a recession. And okay, why wasn't it the last time this happened? But
right, they call it a technical recession.
yeah, as a technical.
Only the NBER, National Bureau of Economic Research, calls the official recession.
Yeah, which they end up calling like 2.5 years later, it seems, half the time. So, okay, what good are you? Because you don't really help me know what's going on right now. But we've been saying this for a while. You were seeing it in a lot of different factors, and it's starting to, the cracks are starting to show a little bit from the employment situation as well as the GDP situation. So something we need to keep an eye on, and I don't think it's a real driver of the market going up anytime soon.
Nope, no, if nothing else, until there's positive prints.
Yep.
I think sideways action and probably a rush to treasuries.
Yeah, which we've seen going up really dramatically in the last week. I'll cover that in just a second too.
And by the way, real quick, they're not expecting, I saw the list of, they're not expecting the first rate cut until July. That may get pulled forward.
Yeah, I could see that happening just because of the craziness even in the treasury markets. A couple of other numbers that they're ones that were in the Econo Day calendar. Consumer confidence, another one. We were coming out of a prior 92.9, came in at 86 this time, below consensus. It's just showing everybody starting to get a little uncomfortable with things. International trade in goods was down below what the consensus was as well. It was even below the consensus range. So once again, it's all this stuff is out of whack, and it supports the administration's belief that we're not winning in the trade route. So hopefully this will get balanced out with some of these trade deals. A couple things to just keep an eye on the rest of this week. Thursday, we've got jobless claims coming in. That'll be interesting to see, because this should be the beginnings of a lot of those government jobs. So you might see a spike up there on the jobless claim side. The manufacturing index, ISM, and then employment situation on Friday, I think, are interesting areas that I think are going to be watched very closely. And just to address what Ron was just saying, if you look at the SHY, here we go, SHY. So this is the 1 to 3 year Treasury bond. We saw this was that right around the time where treasuries really started dropping. This was around the beginning of, close to the beginning of April. We saw that little drop, or pretty big precipitous drop in a few days when some foreign governments and I think some hedge funds were unwinding. But you can see the SHY has moved itself back up, and we're actually at the high point of 6 months at this point. And then TLT, which is the little bit longer, 20-year Treasury, that one got walloped really hard, and it's also on its way back up as well. So what that's saying is we're starting to see the Treasury yields come back down. They had spiked up dramatically around this time period. They've stabilized and started to move in the positive direction, or negative for yields, positive for prices. I think part of that is President Trump laying off Jerome Powell for a while and basically saying, no, I'm not going to fire him, which that was a major factor, I think, for the Treasury markets. And we're not seeing that anymore. And I think if they can, if Powell did it to himself in a lot of instances for going out and speaking in that one instance where he probably should have just shut his mouth. And same thing with our president, should have shut his mouth in these cases.
Can't help himself. There's a microphone.
Yeah, there's a microphone. And like I said, this is not something that you want to monkey with the Treasury markets. It's a huge thing. It's confidence, it's stability in our dollar and everything else. Stop monkeying around with that. Just focus on, okay, if you're going to get trade deals, get them done at this point. And like I said, I don't think we're going to see much of anything until we get some big skins on the wall with some of these deals.
There's 5 major countries. We know who they are. Yep. India, great, but
yeah, India, Vietnam, any China, of those countries,
Japan, China, EU, Canada, Mexico. Until 3 of them are done, and specifically China, I think, look, I'm trying to tell clients now in our reviews, I think it's a coin flip in the next 6 months, whether we're going to be 10 to 15% higher or 10 to 15% lower. Don't know. I think it's a coin flip from this spot here.
And I think, quite frankly, in 6 months, we could be just about even at this point.
That's the coin flip.
Honestly, I could see it just moving sideways. But during that time period, I can see 10% movements either direction.
Right, exactly.
As we go. That band could be that 10% swing either side of the coin.
Choppy range-bound action. 100%.
But yeah, I could easily see us in 6 months being absolutely flat with where we are today. Just because it's every positive thing, the market's going to go up like a rocket ship, and every negative thing, it's going to go down like a rocket ship. And it's a bit of craziness right now. And I think people have got to calm down and just let things be at this point. Like I said, I make adjustments to portfolios and allocations based on what I see from the momentum of the market. But yeah, like I said, I can see being sideways, and I don't really want to be heavily towards the stock market either.
But here's the last quick point to wrap up. Other than what happened in the last 2 months or 2.5 months.
Yep.
And other than COVID, people are used to looking at their monthly and quarterly statement balances just goes up because either they're adding more to it if it's flat, or it goes up. So people are just like, this is the American way. Yeah. I was looking at a stat, or I saw the stat, since 1854, we've had 35 recessions. We've only had 13 since 1944-45, and I believe the reason for that is because we became the world's reserve currency in 46. So we had more flexibility to control either avoiding or getting out of recessions. So looking at all this, folks, these are contractions are normal. Work and live through it. And there's not much else to say other than, yes, we've been spoiled, but guess what? Sometimes credit purges need to happen, whether you want them or not. They've got to happen.
And the other part is, economists have predicted 45 of the last 17 recessions that are out there. You're going to hear the economists babbling on about recession and, it's a foregone conclusion that this is going to cause a recession. Yeah, it might.
You and I were probably 18 to 24 months too late. Or too soon.
Yeah, honestly, I would have said, just from what I was seeing, but somehow resiliently the economy kept pumping along. But I just think there's a point where you just run out of juice. And I think the employment situation has been really good, and that's helped an immense amount, but starting to see a few cracks there, and just anecdotally talking to like people that I know, especially in the tech industry, it's really difficult. If you get laid off, it's really difficult to find a new job right now.
I have 2 friends and clients right now, one in tech and one in biotech pharma. Yep. They've never seen this type of job market as far as difficulty to get a job with their experience and skill set. They said that literally they're getting emotional about it now because it's been so long and so difficult.
Yeah, and I think a lot of them are living off of their retirement savings and everything else.
Yes.
Unfortunately. and then watching that dwindle with the markets be down. I think it's going to be a challenge. We know that, and we'll navigate that here on the show. So folks, thank you for joining us. We're glad that you're here. Hopefully you enjoy these. Please feel free to comment. I'd love to answer questions on this stuff. And we'll see you guys back here the very next time.